The US dollar closed on Friday with the strongest weekly gain since early May as investors cemented optimism about a steady economic recovery in the US. Let's watch a video calendar on Insta TV to find out how trading sentiment could change this week. After a quiet Monday, the economic calendar is loaded with market-moving events starting from Tuesday. The odds are that eventually the pound-dollar pair will be able to escape from a trading range, where it has been trapped for about a month. On June 15, market participants will get to know fresh information on the UK labour market. Traders have doubts that the jobless rate has been going down because the labour market is still contracting. The number of unemployed Brits is expected to increase by 25,000 in May. At the moment of opening the New York trade on Tuesday, market participants will find out fresh evidence that rampant consumer inflation in the US is a temporary happening. The Fed's policymakers always find an excuse to assure the market that there are no signs of the overheated domestic economy. So the US monetary authorities are not going to push ahead with raising interest rates. From the Fed's viewpoint, inflation is too high because of lagging demand. A report on retail sales will prove this viewpoint. According to the consensus, retail sales in the US could have declined 0.5% in May. Curiously enough, the news is likely to calm investors down and revive the appetite for risk. As a result, the stock indices will resume their rally to new highs, and the US dollar will correct downwards as a safe haven asset. The industrial production data is another report to shed light on the prospects of the economic recovery. The output of the US industrial sector carried on expanding in May, having logged a 0.6% growth. On the downside, the pace of expansion is slowing down. This could reignite fears about a sustainable recovery in the US economy. In the first half of the week, traders will take notice of the report on China's industrial sector. This indicator is viewed as an accurate barometer of the conditions in the global economy, as it mirrors a balance between global supply and demand. The print should be taken into account, allowing for the low base effect, bearing in mind the economic conditions in May a year ago. Nevertheless, the annual growth of 9.2% is enough to encourage traders to buy the Australian dollar as the currency of the key commodity supplier to China's industry. On Wednesday, the UK Office for National Statistics will report on consumer inflation for May. No surprises are expected here. The inflation rate has been holding at decent rates, gradually approaching the target level set by the Bank of England, that is at 2% in annual terms. The event of major importance is scheduled for Wednesday. During the American session, the Federal Open Market Committee is due to announce policy decisions. The official federal funds rate is widely expected to remain at the previous level of 0.25%. Investors will be more interested in comments on the policy statement. They will be looking for clues as to whether the regulator will maintain the ongoing stimulus programs and ultra-loose monetary policy. If the policymakers confirm their rhetoric, sell-offs of the US dollar will hit the currency market. You've watched the latest Traders Calendar with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of all the latest financial events, and we'll see you back soon.